Hey everyone, welcome to third part of Costco stock fundamental analysis. In this third part of the series, we will try to analyze Costco's cash flow statement. If you haven't watched the first two parts, where we have covered about Costco's business model and Costco's historical income statement, please make sure to watch those two videos and please continue watching this part. So the first thing what I would like to understand is what is the cash flow from operation over the period of time? Is the cash flow from operation the positive value or is it growing over the period of time? So in that lens, if we look at the numbers for the last 10 years in the trailing 12-month basis, cash flow from operation is all positive and it is technically it is growing. I mean, if it's it, and uh, and technically if not it is growing consistently, at least it is growing over the period of time. And the second information I would like to see is compare operational cash flow with the net income. Why? The reason is a lot of business with some accounting gimmicks can show net income as positive over the period of time. But it is technically not possible to gimmick anything or to manipulate anything in the operational cash flow because in operational cash flow, all the accounts payable and the accounts receivable will be stripped off, and operational cash flow shows the actual number or actual dollar amount which has been deposited into the business account but during that period. So that is where I would like to see this graph. That is, if we look at this most recent point, that is the operational cash flow is $15 billion, whereas the net income is around $8.84 billion. And historically, if you see the line which is in the green straight line, which is the operational cash flow, and the green dotted line is the net income. Technically, you could see all the period of time, the operational cash flow is greater than the net income. Or even to talk in simple terms, what I did is divide the operational cash flow of the business with the net income over the period and plot it. If the number is above 1 consistently, which means all the dollars which they are showing in the net income is getting deposited into their bank as per the during the time frame. So that is why this number is more important to look at while looking at the operational cash flow. So my second check is done in the operational cash flow for Costco. Then the third information I would look at is non-cash back items. Technically, all the business you look at, there will be two components. First thing is depreciation and amortization, and the second one is SBC or stock-based compensation. So if you look at the depreciation and amortization for Costco, it's historically growing. Yes, of course, whatever buildings or whatever machineries they have, they do depreciate gradually, and there is no surprise in seeing the depreciation value steadily increasing over the period of time. In the most recent trailing 12 months, their depreciation is around $2.54 billion. While looking at the stock-based compensation, again, as a business grows, a lot of top executives they get paid in the stocks rather than cash. Even this number, you could see it's consistently growing, and in the most recent trailing 12 months, stock-based compensation is $911 million. And finally, what I would like to look at is the other working capital items. So what I need to understand from this chart is, long story short, working capital contains lot of items like accounts payable, inventory, and accounts receivable. But for considering the time frame of this video, I'm not going to talk about all these three things individually, and I'm just going to take total working capital as a one. What I need to understand is the total working capital during the time frame, is it positive or negative? If it is positive, which means the company is earning the cash. If it is negative, the company is draining the cash. In this case, wherever you see the red dot during the time frame, the business is draining the cash. Wherever there is a green dot, which is positive value, the company is efficiently collecting the cash back from the customer. So in this time period of last 10 years, Costco has effectively collected the cash back from the customers during the time frame. That is why you could see the total working capital line, which is almost for last 40 quarters, is more likely positive rather than negative. So this is the simple information which we would need from the operational cash flow. Now let's move on to the investing cash flow. In the investing cash flow, again, I'm looking at the trailing 12 month for 10-year period. The first thing in investing is capital expenditure, or in short term capex. As any business or as any growing business, you would expect the capex to grow historically. That's what we are seeing. Maybe for the first 3 years here, it's not growing. But then from 2020, I think post COVID, the capital expenditure of Costco is gradually rising. And in the most recent trailing 12 months, they have spent $6.19 billion in capital expenditure. And the third information I want from CapEx is CapEx by depreciation and amortization ratio. We have seen what is D&A, that is depreciation and amortization in operational cash flow. I would like to divide that number with the capital expenditure and see what is the ratio. If this ratio is 1, which means the company is spending more money into the capital expenditure than it is depreciating. If there is this ratio is less than 1, which means the company is not trying to grow or scale up their business. So in this case, capex by DA, depreciation and amortization ratio of Costco, is consistently above 1.7 over the last 10 years. This shows why Costco is able to open new stores consistently over the period of time, which we have discussed in the first part of this video. And the second thing what I would like to understand is free cash flow. Most of pro investor, including Warren Buffett, he always suggests free cash flow is the king, and that is what we would like to understand from the investing cash flow. While looking at free cash flow, I would like to see three information. The first thing is what is the dollar value of free cash flow. Even here, if you look at Costco's free cash flow is not consistently growing. There was some growth, then some dip, then some growth, some dip, which means Costco is regularly trying to put a lot of capex as any growing business that is expected. But by end of the day, even after spending for capex, their free cash flow is positive. That is the first thing. Second thing is, as I always prefer, rather than looking at dollar term, always prefer to look at in the margin. That is the free cash flow dollar which you have seen divided with the revenue, you would get a percentage. That percentage makes more sense. By looking at this number, in 2016 they had around 1 to 2% of free cash flow, but as of the most recent percentage, their free cash flow margin is 3%, which means they are not very fancy growth or fancy free cash flow margin business, but steady and consistent growth business. And the next one, what I would like to see is marketable securities, because a lot of business they invest elsewhere as well. Not all the cash is invested into the business. They also invest in some marketable securities like treasury bills or treasury bonds. So this chart shows us how much they have invested in marketable security, that is other than business, what they are investing in. So I'm just showing one piece of chart here, that is on as of May 2026, they purchased $935 million worth of marketable security, and they have sold or matured around 899 million. So this historical chart shows for each and every period how much marketable security they have bought or they have sold. And what I could understand from this is Costco technically is spending a lot of money other than this business, that is to purchase marketable security as well. And the next one, what I would like to see is the net flow. The net flow is how much they have purchased capital, I mean, how much they have purchased the net securities, net out with how much they have sold or matured. That is, in this chart, we could see they have purchased 935 million and they have sold or matured is 899 million. That is, still they spent $36 million, which went out of the business into marketable security. That is the number which you would see here. That is 36 million during the time frame is went out of the business. Then the next one I would like to understand is capex versus security. That is, how much the business is spending in expanding their business, that is growing new, I mean, opening new store in the Costco case, versus putting the money in the safe asset like treasury bill and treasury bond. So in this case, for the most recent year, or for the most recent quarter, the capital expenditure is $6.19 billion, and the amount they spent on security is 935 million. That is, the capex is for 80. That is, they are spending 87% of the money in capex, and only 13% of money is invested in a security. This shows that the business is keen in expanding their business rather than just putting their cash in the safe asset. If I want to put it in again in the ratio, that is capital expenditure divided by um, you know securities, marketable securities, this is how the number look like. As of the most recent quarter, their ratio is at 6.62x. That is, for every $1 they are investing in marketable security, they are putting $6.62 in the capital expenditure. So this again shows the nature or the business which steadily grows over the period of time. And the next one is financing cash flow. In the financing cash flow, the first thing what I would like to understand is, does this business pay any dividend? In this case, the first thing is, we could see the dividend in three lens: dividend per share, a dividend yield, and dividend payout ratio. So technically, if you see, Costco is paying dividend consistently for the last 10 years on quarter basis, and their dividend yield is at 0.13 percentage or 0.2 percentage. But for me, what is more important is payout ratio. Payout ratio is nothing but the total dollar amount of dividend paid divided with the net income. This shows me how much of the cash which the business earned has given back to the shareholders. In this case, it is 29.8%. That is, if Costco earned $100 as net income, they gave back $29.8 to the investors back, which heavily shows that Costco is trying to reward back its shareholders rather than keeping the cash to itself. But yes, at certain points, you could see the ratio is much higher, around 300%, 400%, because Costco gave special dividends time in and time out. That's why this number is higher. Then the next one, what I would like to understand is their share buybacks. Most of the business, they do share buyback. If we look at Costco, Costco is also doing share buyback, but not at a very fancy number. Like a lot of tech companies, they do billions of dollars in share buyback, but Costco is staying at 100 to 200 million dollars. And the next one, what I would like to see is the total payout ratio. So what this means is, Costco is giving dividends and buybacks consistently over the period of time. I would like to compare that number with their net income. So in this case, what I did is, took the dividend plus buyback divided with the net income and see the ratio. That is the ratio what I would like to see here. So consistently, over the period of time, this total payout ratio is around 40 to 50%, barring one or two time frame where they gave a special dividend. Other than that, technically they are, technically Costco is returning back to shareholder rather than keeping everything in the retained earnings as equity. And finally, the net debt changed over the period of time. Yes, by end of the day, Costco has some debt. This chart shows us how much debt they have repaid over the period of time. So how this chart is populated is, any new long-term debt taken, netted out with the repayment of a long-term debt. So in this case, we could see the number is very small, which is Costco is not taking any new debt. Even though if they are taking any new debt, they are, netting out with paying out the old debt. So that shows us this number. So now we have discussed. So now we have discussed in detail all the three cash flows, and finally we could see the cash flow summary. So the cash flow summary is nothing but just the three numbers, which is operational cash flow. For any growing business, I would expect this number to grow. Yes, from 2016, it was $3.29 billion. In the most recent quarter, it is $15 billion. It is growing consistently. And the second thing is investing. For any business to grow, they need to invest in their business, like open new stores or purchase the open new stores or do PPE. So in this case as well, Costco is investing consistently. In the August 2016, their investing cash flow was negative. Investing cash flow was $2.3 billion, whereas in the most recent quarter, it is around $6.3 billion. And finally, cash flow from financing. This, I don't have any preference, either it should go up or go down, but it's at a consistent level. Then finally, the cash shield. By end of the day, what is the cash the business is owning during end of each and every quarter? If this number, during August 2016, they had $3.38 billion, then the number grown consistently. And as of the most recent quarter, they have $18.95 billion in cash. So that's it. We need to understand from the cash flow statement. By looking at this, what I would summarize is, Costco's operational cash flow is growing consistently year on the year. And in the investing front, Costco is spending a lot on CapEx. That also indirectly points us to why they are able to open a lot of new stores over the period of time. Then from the financing perspective, they are giving back consistently the returns to the shareholders, either in form of dividend or the share buyback. So that's it for this video. In the next part of video, we will come back and do the analysis on balance sheet and figure out what are the numbers or the story it has to say to us. With that being said, thank you so much for watching. If you want to play with this application, I'm just giving you the link of my application here. You don't need any credit card or anything, just a sign up and you can start using the application. Thank you and take care.